In this video, we are going to talk about top 5 stocks to invest in 2022, so before starting this video, please like this video and subscribe to our channel for future updates. The start of 2022 brought something financial backers hadn't seen since the beginning of 2020, mindfulness and red. High valuations started stressing Wall Street, and the Securities Exchange experienced its most exceedingly awful month since March 2020 in January of this current year. Perseveringly high expansion, increasing loan fees, taking off oil costs, and a conflict between Russia and Ukraine are new headwinds influencing, straightforwardly or in a roundabout way, each stock in the present market. Considering that, here's a glance at US News' 5 best stocks to purchase for 2022 and how each has fared up to this point. As an equivalent weighted portfolio, these picks are falling behind the market so far, down 10.6% year to date, contrasted with the S&P 500's 5.8% downfall through April 8, 2022. Here is some specific situation and the bull case for each pick. Here's a list of the top 5 stocks to invest in 2022. Let's start. Number 5, EOG Resources Incorporated, EOG. The best performing of US News' 10 best stocks to purchase for 2022 is EOG Resources, a US oil and gaseous petrol maker. Picked to a great extent as a fence against progressing expansion, EOG hasn't disheartened, hopping 45% year to date as energy costs have spiked, raw petroleum momentarily overshadowed $123 a barrel, and expansion keeps on moving, with the shopper cost list hitting 40-year highs of 7.9% year-over-year development in February and 8.5% in March. EOG was in any event murmuring in the final quarter of 2021, with changed income per share, or EPS, flooding 335% year-over-year. The organization of late delivered an extraordinary profit of $1 per share, or 0.9% of its cost at that point, because of its remarkable outcomes. Subsequent to posting record change profit in 2021. Number 4, ASML Holding Nevada, ASML. On the off chance that you can't deal with me even from a pessimistic standpoint, then, at that point, you certain as damnation don't merit me at my best. This statement, frequently spuriously ascribed to Marilyn Monroe, may have importance to portions of the Dutch tech force to be reckoned with. ASML shares, exchanging only 10% over 52-week lows, have been indiscriminately auctioned off alongside the remainder of the tech area and pounded by the revolution from development to esteem. Meanwhile, little has changed with the organization's cutthroat scene and bullish proposal. ASML actually partakes in a worldwide imposing business model on outrageous bright, or UV, lithography machines. UVs are incredibly cumbersome cutting-edge machines that scratch ever more modest examples on computer chips. Seemingly forever to the worldwide semiconductor deficiency, UVs selling for about $150 million a pop, and twofold digit development in income and profit per share figures expected in 2022 and 2023. Managing ASML stock's year-to-date droop is a little cost to pay for its drawn-out potential gain. Number 3, Metafist Incorporated, MED. Metafist is a Baltimore-based weight reduction executive organization. Obviously unique in relation to different organizations on this rundown, MED is the littlest organization among the best stocks to purchase, with a market capitalization of about $2 billion, and flaunts the most elevated profit on the rundown at 3.6%. Exchanging at a measly multiple times income, MED's business seems underestimated, particularly given a perfect accounting report, a long history of development, and expected income development of 15% and 13.7% in 2022 and 2023. Metafist climbed its profit payout by 15% in March. For financial backers looking for an inconspicuous stock with large potential gain potential, Metafist shares have generally 87% potential gain to their 52-week highs. Number 2, Meta Platforms Incorporated, FB. The biggest tech stocks have gone from market sweethearts to cast-offs in record time. Facebook parent organization Meta Platforms is an incredible illustration of that. Simply the previous fall, shares were making new all-time highs, and the future appeared to be brilliant. Pioneer Mark Zuckerberg declared the organization's huge interest in the metaverse and plans to change its corporate name to Meta Platforms to feature this change. Only months after the fact, the metaverse is an objective of disparagement, and financial backers have abandoned the organization. Certainly, Meta deals with issues with its center business, as the advanced promoting business has eased back. Be that as it may, Meta keeps on losing a basically enormous measure of money. Meta shares are exchanged at multiple times income and under multiple times profit before interest, expenses, deterioration, amortization, or EBITDA. In the meantime, examiners see Meta getting back to benefit development in 2023. Number 1. Alphabet Incorporated, Google. It's difficult to get a handle on precisely the way that huge Google parent organization Alphabet is. One extraordinary illustration of its scale is the size of its prevailing internet-based video stage, YouTube. In the final quarter of 2021, YouTube posted an income of $8.6 billion, almost $1 billion a bigger number than the $7.7 billion that Netflix Incorporated, NFLX, set up in a similar period. That actually leaves Alphabet's meat and potatoes web search tool and its cloud division as significant tasks financial backers have a case on. In spite of extraordinary quarterly outcomes and the endorsement of a 20-for-1 stock split in July, shares are still down in 2022, to a great extent because of the pivot out of development stocks and tech names. With Google exchanging for multiple times profit, a markdown to the S&P 500's numerous 25 shares appears to be a take. What do you think of our video? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.